welcome to Moneycontrol. You've tuned into IPO Watch, and I'm your host, Nikki Mirchandani, in one of the largest offering for 2024. Now, we have Bharat Highway Invit, which comes up with an initial public offering of nearly 2,500 crore. The issue opens for subscription on Feb 28th and closes on March 1st, 2024. The price band has been set in the range of 98 to 100 per share. The minimum lot size for an application is 150 shares, and the amount of investment required by retail investors is 15,000. While Invits aren't a new instrument, but just helping with the basic layout, an infrastructure investment trust, Invit, is a collective investment scheme similar to that of a mutual fund, which enables direct investment of money from individual and institutional investors in infrastructure projects to earn a small portion of the income as their return. Let's get to know more about the company. Well, Bharat Highways Infrastructure Investment is an infra investment trust established to acquire, manage and invest in a portfolio of infrastructure assets in India. But to know more about the cash flows, the strategies, USPs, business model, we're being joined by Amit Kumar Singh, who is the CEO of the company. Morning there.
Hi, good morning, Nikki. Hi.
All right, let's start off with actually the unique selling point of this Invit offering. Of course, this as an instrument isn't really different as compared to what we have, IRB Invits and other Invits like PG Invit, IndiGrid Invit. How different is this offering? What is the rate of return that we're looking at, IRR? Beg your pardon, IRR. If you can highlight the big of USP of your business model, it will be great.
Sure. Thanks, Nikki. So basically, this is the first Invit, which is a public listed Invit, which is led by all the, HAM assets. So this is a road Invit, which will have all the HAM assets, which is hybrid annuity assets. So this is the, first of its kind of Invit in India, where you have underlying assets, which has a fixed annuity, which will be receiving from NHAI, National Highway Authority of India. And that annuity is basically, in turn after adjusting for your Invit related expenses, your debt servicing, a fixed sum will be given to the, basically unit holders, to investors. So this is a unique proposition. There's no Invit in India as of now, especially listed, which has all the HAM assets as, under one Invit. The second point is, basically in terms of, rate IRR, what you asked. So of course it's difficult to say now because we are still in the book building process and the file is still to be discovered. But what I can say that this is going to be if it is going to be in the range of almost 350-400 bips over and above maybe a 12 or 13 year AAA paper which you'll be trading now, maybe almost 430, 20, 30, 40 bips over and above 10-year GC. I think from a asset class perspective, if you see, that is, it's again, it's unique. There's no asset class which can give to the investors this kind of return. One more unique proposition, what we can offer, or what we are, what is basically being captured in this Invit is that Invit has a ROFO, which is right of first offer with GR Infra. GR Infra is a listed player or has almost more than 12,000 crores. And they are one of the largest road EPC company. So Invit has gone into a ROFO with GR, where GR will be transferring 23 more HAM assets to this Invit. Over and above this 7 plus whatever GR develops over the next 5 years, that will also come under this Invit. So I think this unique proposition of ROFO assets ensures the incremental growth, basically in terms of revenue, because Invit will have a decent pipeline, and it also elongates the life of them. I think this is what the 2-3 unique proposition I can say.
All right. Okay, so HAM model, that's one. Incremental percentage over the AAA rated papers, the rate of returns essentially, which is 350 basis points to 400 basis points higher, if you've got that correct. These are your two USPs, right?
Sorry?
Okay, I just suggested that the incremental difference in terms of return over the rated paper, that is one, and inclusion of HAM model of all 7 HAM projects that you have under one portfolio, that's essentially the unique selling point of your company, correct, as an Invit?
That's right.
All right. Let's further delve into detail, right? The company's portfolio right now, as you suggested, all seven consist of, it is operating on ham basis. It's operating in the state of Punjab, Gujarat, Andhra Pradesh, and Maharashtra and Uttar Pradesh. These are
That's
few
right.
geographies that you're operating. Tell us more about how scalable this is. You said 7 plus 23, right? The capacity
That's right.
has the capacity of 7 plus 23. That will be till 30. All of them will be ham. And by which year would you have these projects being included in the Invit? That's one. What kind of rate of returns are we looking at from these as well? Is that going to be of the similar magnitude? That's one. And why not? Why just ham? Why not some different business model? What's the agenda behind this move?
Sure. So I think, yeah, this is a very pertinent question. So, first question is, of course, this all 23 ham projects, they have similar kind of, earning profile. So, basically, whatever rate we are going to offer, yeah, it will have a same kind of return profile. And of course, once the Invit get listed, it will be trading at some yield, and will ensure that every incremental asset acquisition will have a incremental yield to the existing unit holders. That is one bit. Second thing is, in terms of geographies, this existing seven assets has these five states, but the next 23 assets has again, basically they are across, different other states as well, like Bihar, Chhattisgarh, Gujarat, Rajasthan, again, Karnataka, Telangana. So all these other states will also basically will be covered under this Invit when we add those 23 ham assets. One more point is what you asked about the why only ham and why not other asset class. There I would say that basically while ham is is a model where you have a fixed annuities, right, and we so basically it ensures my cash basically availability because we know that this is a fixed sum which is going to receive from NHI, and this is what we are going to get, and this is what we in turn we can pay to our unit holders. If we go to the different asset class, if you tap into different asset class like toll and all, what happens, of course, then one kind of variability, layer gets added because, toll is what exactly, the way I look at it is toll is a inflation hedged, the growth story of India. So, of course, if it plays out, basically, it will have, uh, its own pluses. But how it could also pan out is that basically if I'm giving a DPU guidance for our unit holders, then we also need to see that that DPU guidance remains for the next whatever 12, 13, 15, whatever the years we are talking about here. When we add toll asset, toll basically it's not that every year or within the first year itself you start getting that kind of revenue stream. Your toll revenue keeps growing at every year. So if I have taken suppose a toll project or BOT project which is toll at the start, and it takes a time to grow to a level, it may impact my TPU guidance which I'm going to go, give to my investors. So that's the reason if we want to look at say toll assets, of course it should have at least traffic history of 3 to 5 years, because 3 to 5 years in India, you may see that you may have seen some kind of black swan events also, like maybe a demon, maybe a COVID, so, or maybe some kind of agitation in a specific state. So of course that that road would have seen this kind of black swan events. So of course my revenue also would have been basically stabilized by that. So that's the reason 3 to 5 years is the minimum requirement to see, to assess, to actually evaluate what is going to be the exact toll revenue, and then accordingly see that if that can be taken at the Invit level, because it should be again able to support the DPU guidance what we are giving to investors. Any kind of deviation from that is something which is not Invit thinks we should tap into that kind of asset class. That's the reason we are not that focused upon toll now, but it can be looked at as and when it will come. Yeah.
So, could you provide us the distribution per unit guidance that you just suggested right now? What are the numbers looking like? And also, let's talk about the inflows per se. Talk more about that. What kind of number can we now look at? What was the number that stood at for, because I was looking at the negative cash flows projection for 26, FY25 and 26, if I'm not wrong, where it stated a negative figure of around 106 or and 309 crore for FY24 and 25. These are cash flows from operating activities, and the flows, outflows rather, continue to 250 odd crore to 2026. So help us understand about the cash flows. How will that augur in the next 3 years? What kind of DPO guidance can you provide to your shareholders given this?
Sure. So, actually, these assets are little different assets where you have basically, these are the fixed cash flows which you receive from, NHAI. So basically, this gets qualified as a financial asset under Ind AS accounting. So I think we should just, from a simplicity perspective, we should look at, say, EBITDA. So just to give you a number, my EBITDA for FY25 is going to be, say, around 1,005 odd crores, which is going to dip to, say, 975 crores next year, which is FY25. So why this dip is because when we talk about, say, only 7 assets, of course, so if you see across my 7 assets, I should have received 210 annuities in aggregate together, where we have already received 37 annuities out of that 210. That means my weighted average concession period, which eventually should have been 15 years, has come down to, say, 12 years. Now, so as and when, if we talk about only this 7 assets, of course, as and when when we will basically go towards more maturity of the assets, my revenue might start coming down because once we'll be nearing towards the maturity period, which is 12, 13 years, then of course revenue will have impact on that. However, just to take care of that bit only, we are proposing to have a ROFO, because as and when the new assets gets acquired under this Invit, of course, that incremental revenue from that new asset also gets added. And on account of that, then this, whatever, the numbers you are seeing, because these numbers really relates to the 7 assets, 7 projects, what we are talking about. But the moment you add the next asset, that cash flow also gets added. Their EBITDA will also get added. So there won't be any dip. This dip is just only for 7 assets, which is as a part of the formation transaction is being transferred to this Invit. And because of that, you can see, revenue dip down, but maybe ROFO assets addition will take care of this. Yes.
And how about your DPU guidance?
See, my again, we have my DPU guidance in terms of basically, what we are thinking in terms of periodicity, it is going to be quarterly, and in terms of guidance, of course, still the book build process, because that's the IRR discounted in private equity value. But it is again is going to be the range what I gave you in terms of basically it's going to be quarterly, and it is going to be almost in the range of maybe somewhere between, say, 11 quarter 11 between 11 quarter 1150, those kind of range. And that is what we think that basically is going to be our number, which will distribution will happen on a quarterly basis. Yeah.
All right, got your point. Let's also understand about your debt proceeds and also talk about your debt to EBITDA. What kind of level are you going to be comfortable with? What is the level right now? Because the company is bringing in also these assets to service in the debt, right? The external borrowing has gone up from 2,847 crore to 3,816 crore as of FY23. I've not picked up on the 6 months number, but you can talk more about it. What is your comfort level that one can look at?
So basically, in terms of debt numbers, right? Maybe my 6-month debt numbers. What you ask is again is the range of 3,800 crores. But when we talk about, say, this Feb end number, when we are going to pay off all the debt, my debt number is going to be 3,527 odd crores. In our case, Invit, we should not look at the debt to EBITDA. Rather, we should look at debt to EV. Because as per the SEBI Invit regulation, you can only have, say, an leverage, which is my debt to enterprise value, initially 49%, and that eventually can go to 70% if on basis of complying to condition A, you remain AAA, and number two, you have to have a successful track record of 6 distributions. So right now, once this transaction gets over, basically, because what we're planning to do is out of this 3527 crores, this 2500 crores, what we're planning to raise, almost 2400 crores of this 2500 crores is going to be used to pay this SPV debt, which is 3527 crores down. That means at the Invit level, basically, we'll be left with only 1127 odd crores of the debt. In terms of debt to EV, then it will be around 20%. And I think that will give us a lot of space in terms of using our leverage and acquiring, say, almost 3,500 crores of value of asset. Even we don't reach 49, and the moment we do our 6 successful distributions, we can additionally have almost 3,500 crores of the acquisition. So almost 7,000 crores of the acquisition we can do just by using our leverage, and we don't need to hit the market so soon. Maybe post that, because there's a decent pipeline, 23 assets what I showed you, and we will also be looking at non-GR assets. So maybe then we may have to come down the market again to raise. That could be 1.5, 2 years down the line. I don't know, how the opportunities will come around. But I think right now, currently, on this post-issue basis, my debt to EV will be 20%. Yes.
So this will be over and above the 23 assets that you're talking about, right?
No. So initial part of the formation transaction of 7 assets, I will have SPV debt of 3527 crores. Out of that, 2400 crores will be paid out. So I will have just say 1127 crores of the debt, which we will raise at the Invit level, and that will be pushed down to SPVs. And so I will have a debt of around 1127 odd crores, which will be as a debt to EV basis just 20%. Going forward, since as I said, as I enumerated a while back, that we can go up to 49%. So I can raise almost 3,500 crores of incremental debt, and I can do asset acquisition, and that is only up to 49%. The moment we go from, we'll be done with our 6 successful distribution. We can do basically, maybe we can raise further 3,500 crores of the debt. So incremental total 7,000 crores of the debt from now on. And we can acquire the assets out of the 23 assets what we've spoken about. Of course, entire 23 assets can't be acquired in 7,000 crores. We may have to again hit the market to raise the further round of equity. Yeah.
Okay, so help me understand this. One round is right now with the IPO. Second round will be again 7,000 odd crore, maybe 2 years down the line.
Which will be only debt raising.
Will be just debt raising, which will be to an extent of 7,000 odd crore, right? And post that also you will go for another round of debt raising, which will again take into consideration the remainder part of your HAM projects, right?
Yeah, so right, it will be a mix of debt as well as the equity raising, because this 7,000 crores, with 7,000 crores, I will be able to say buy maybe 5-6 assets of GR, or maybe 2-3 non-GR assets. So then that will be left us again, maybe with 16, 17, 18, maybe more assets of GR for which we need to acquire in this Invit. So maybe we may have to go in for next round. After this 7,000 crores, we may have to raise debt as well as equity to acquire the balance, round of assets which is there in the ROFO. Plus any other market opportunities also which we may tap into. Yeah.
Okay, let's talk about why HAM model, because do you intend to have more projects under this model? Because NHAI's debt figure, everybody knows about it in the industry. It's ballooning. It's 3.44 lakh crore at the end of Jan 2023, which 2022, beg your pardon, which was 14-fold rise almost in the last 7 years. So the financial health of NHAI is questionable, that's one, or maybe the allocation to NHAI also. We know that the budget has been barely, in terms of allocation also, it's been 2.7% kind of nominal hike that we've seen for the road sector. What makes you select this model now, also given that NHAI financial health is a question? B, outlook for the industry also seems to be a little grim given the kind of allocation that government has made towards the road sector this year around, though it's an interim budget. But What are your expectations from the final budget? Do you expect more allocation coming in? Would you continue with the ham model? Tell us more about it.
No, so I think this question on NHI balance sheet. Basically, this is not a new question. It's been being asked so many times. If you see the NHI balance sheet, you just can't see the debt numbers, right? I think you also have to see that whatever new roads are being built into the country, NHI is through their Invit, through the TOTs which NHI is basically bringing, where they are monetizing their assets. So they are also getting cash flows through their own Invit as well as the TOT. Plus, what happens is whatever the new assets with new road which gets constructed, of course, the toll collection on that also starts. So while you are seeing the basically just the number of debt which has grown maybe 14 manifold, 14 times as per you, you also have to see the growth of NHI toll. And uh, basically, if you see that number is also, I think, if I'm not wrong, is around 45,000 crores. And I think 5, 6 years back, that used to be just, I think, 8 or 1,000 crores. So I think that number is also gone, gone up big time. More roads are being constructed. So of course, that will also keep getting added to the overall revenue pool of NHI. Point number A. Point number two, if you see the budgetary allocation also, so the government, even this interim budget, they haven't brought the their allocation towards Ministry of Finance has not brought down their allocation towards more. It's rather not sit flat, maybe just 2% more. But look at the basically overall vision in terms of GDP growth our government has, and that is the Amrit call what we are talking about up to 2047. And I think this infrastructure will play a very crucial role in terms of that overall GDP growth, what basically our Prime Minister is talking about. And in that case, of course, when we talk about infrastructure, road becomes one of the very integral part of this more because if you develop more, you get more road constructed. You can see the overall economy of that catchment area around that road, gets basically economy gets built formed recently, and that adds to the overall GDP. And there's a history to that. There's a science in, and we can see that. So basically, of course, government. So basically, coming back to the point, government very knows that what is the criticality of the road construction which is required for the development of country as well as to the GDP target what they have given to themselves. And on account of that, we don't see that maybe that there will be a dip in terms of awarding by NHI. Maybe it can be maybe this year being an election year, you can see maybe a lesser award, but I think it will again uh, uh, pick up next year onwards. It will pick up. And under ham model, what happens, your NVT from NHI gets basically fixed, so you exactly know what is my revenue profile is going to be. Just for a clarity perspective, NHI has been formed under Special NHI Act in the Parliament, and they are a AAA entity. They are a sovereign risk, and if means I don't know basically, but we have not seen that NHI has not been paying annuity on time. At least in our case, you can see all the 37 annuities which we saw, basically which we have received, have been received on time. Only case where NHI doesn't pay you annuity or maybe withhold is you have not maintaining the road properly. And for that, Invit has basically got a back-to-back arrangement with through its sponsor and project manager, Adar Shila with GR Infra, that basically this fixed cost on a fixed cost basis, this operation and management and a periodic management will happen across these 7 roads, and it will be done by GR Infra on a fixed price basis. So I think we don't see any challenge here in terms of cash flow availability from NHI perspective. And second, because the conditions which are enshrined in the concession agreement, where there's any risk in terms of the revenue profile, and that's why we like this ham model. And I think that's how it adds to the consistency, maybe the visibility of the strong cash flows, fixed cash flows. I think that adds to the basically an extra layer for this Invit. Yeah.
Okay, let's chat about your financials in that case. A 4% drop from 1,600 crore in FY22 to 1,537 crore, or at least when it comes to the revenue. Of course, 98% comes from earned on operation from these 7 projects that you've mentioned. Tell us more about what kind of growth can we now look at. There is a little drop that we've seen in the top line performance. On the flip side, we've seen the net profitability, which is actually risen in from 63 crore in FY 2022 to 527 odd crore. Help us understand the dichotomy that we are witnessing between the top line and the bottom line, and what's the correct way to look at it and what can be expected going forward.
Exactly. So I think, because these HAM assets are basically financials are prepared as per the Ind AS basis, because this gets categorized as a financial asset, because the annuities, the balance annuities, what you receive from NHI, that gets classified as a financial asset under Ind AS accounting, and then you basically, get an interest on those financial assets that you show as your, basically as your revenue. So I don't think that's a very proper way, because it a little confusing, I would say. Maybe I think we should look at the cash flow, which, basically EBITDA. And I think that's what I said, that maybe 2024 I will have, say, around 1,005 odd crores of the EBITDA, and which is going to be almost 975 crores in FY25, and maybe around the same level in FY26. But however, I think, because what happens in HAM, you have a concession life which is fixed, which is 15 years. As of now, we are talking about 7 assets, which is a part of the formation transaction, which will come into this HAM. If you just look at these 7 assets, you can see that, of course, revenue will keep coming down, because you'll also be nearing to your completion, period. But, that's the reason you will see maybe, because, you have already received 37 annuities out of 210, and you'll keep receiving annuities. So of course, there won't be much growth. But the moment you add new asset, that new assets cash flow also gets added to the existing, basically cash flows, and that's how you will start seeing the growth. So with basically asset addition, what we are looking at, basically, we can see that there will be again marginal growth every year. And not marginal, because when we'll keep at, say, 2-3 assets, the growth will be different. Maybe when we add say more assets going forward in the next 2-3-4 years, then that basically the revenue growth will be more. Once we talk about this growth in the cash flow about this Invit asset, because more assets will keep getting added, and along with those assets, the cash flows will keep getting added, and you will see a growth in terms of your revenue as well as EBITDA. Yes.
All right, sir. We're just going to leave it at that and wish you all the luck for your initial public offering. And hopefully we get to see you soon again at the time of listing, and of course your quarterly earnings.
Thanks. Thank you. Thank you so much. Thanks.
All right, that's what we have on this edition. India's economy is gearing up for the second initial public offering of highway infra investment. We have only IRB Invit to compare this against with, and do bear in mind the fact that IRB Invit was listed on exchanges in June 2017. Thus far, the trajectory or the performance has been quite disappointing for IRB Invit, with the Invit having lost more than 32% of its value from the listing price and trades at a 30% discounts over its net asset value. But will that also be the case for Bharat Highway Invit, or is this going to be any different? We'll find that out. But with this, it's a wrap, and goodbye from the team. Stay tuned in for more.